All right, so I want to talk about how to use this screen for different strategies. So we'll start with the day trader strategy, which is the initial abnormal break from low volatility, surprising the market essentially, right? And that is using our day trader screen right here. So the day trader screen looks for 2-minute action candles. If you see one come up, very simple process. You would open up the symbol on your screen, SOAR, and then you would want to see a 2-minute chart. And then you just determine if this is a break from a good pattern. It is. 13-minute pattern is poor because it's breaking up into pessimism. So that's not particularly good, but that's the process. All right, so that's if you, I just did a video earlier today and sent it to all of you about the strategy cycle. So this is phase one, the initial break to the upside from low volatility, but before it's abnormal, just basically the first abnormal break. All right, so that is how you would do your day trader strategy, primarily using this screen right here. You could also use this screen because this is 1-minute action candles. So if you saw one come up here, like Wolf made one at 327, I could again pull up that chart and see if it's a initial surprise break with abnormal volume. In this case, it is not. But if you get one where you see a spike of volume breaking from low volatility, that's something to consider. All right, now phase two is our hit and run strategy. So the hit and run strategy, we just draw a little picture here quickly. You have boring sideways trading, break to the upside, that's phase one. And then you might have a very minor pullback, 3 candles, 4 candles, and then you break up again. This could be a message candle. Doesn't have to be if it moves up through the highs, assuming that there's abnormal volume here when it starts. Okay, so that's your hit and run. How do you find hit and runs? Watch your stocks that are triggering 1-minute action candles or 5-minute action candles, and then monitor their charts. Stocks that are on the alpha gainers list, stocks that are on the low float list. This is really a strategy where you kind of have to watch the chart. What will happen if one of them is abnormal, it'll be on the day trade watch. And if it makes an action candle here, it might be a reason to look at it. But for the most part, for hit and runs, you're finding stocks that are coming alive, and they often do this in the aftermarket too. They come alive, and then you're just watching for that initial quiet break. So I'm going to show you one from today, which was a hit and run. This is Duo. Now, this isn't the perfect example because we had this break in the pre-market, but let's turn the pre-market chart off and just imagine that that didn't exist for the sake of my lesson here. So I'm going to go like this, and I'm going to blow this up, and we're going to make this a 1-minute. So here you have the initial move upward. You have a pullback of at least 3 candles, 1, 2, 3, 4. Once you've got at least 3 candles, you just put your buy stop in at the action candle close plus a penny, and you'd get filled right there, and then, enjoy the run. Okay. Now the next one is early risers. To be on an early riser list, I guess, you want the stock to be trading abnormal volume, preferably low float, preferably high liquidity. And those stocks are going to show up here in your alpha list. They could show up in the low float list as stocks that are moving up from the open. And so you're just building your watch list of stocks and then opening up charts and cycling through charts and looking for opportunities. And of course, the early riser is a little different than the hit and run in that the pullback actually goes below the moving average. So if we go back to Duo, and here we have a pullback where you have 3 candles below the moving average, and then you have a break right here. So that would be your early riser. It's not great in this situation because it had gone up so much already. I prefer it to be the initial move, a little longer pullback than hit and run, and then a break. This was kind of phase 2, or the second wave up right here. Okay, and then you have your IPBs. Those are going to show up here. That's pretty simple. You have your superheroes. That's just monitoring your watch list for stocks that are breaking from a compressing volatility pattern. So if we use ATGL as an example, ATGL is on the watch list right here. The reason it's on the watch list is because it's abnormal. It's a low float stock. So there, it's probably on here somewhere, the alpha gainers list. There it is on the alpha gainers list. So it's in lots of places. So it's a stock to watch. It was on the watch list from this morning. And then what we see is compressing volatility and a break. And so that's your superhero setup driven by the watch list, which is driven by the low float, the alpha gainers. Could be any of these screens would make you find stocks to put on the watch list. It's kind of our goal is let's just put stocks on the watch list to be monitoring for those strong moves. Okay, and then that's superheroes. Then of course, swing traders are over here. And I think that's about it. So that's sort of how to use this screen. I may still make some tweaks. I welcome your suggestions on what we can do to make this better. But for me, the goal is I want a list of stocks that I'm watching. Could be 5 to 10 stocks with like 3 or 4 as kind of my main ones. And the 3 or 4 are going to be very liquid, low float, moving up from the open, very abnormal. And I just watch their charts and wait for the pattern breaks to happen. And if they're really liquid, like over 100,000 trades a day, then you can even watch them on the 10-second chart.